Hey, so you want to start investing this year, but exactly how does this whole investing thing work? What apps should you use and what should you buy? Let's go ahead and break it down. In this video, I'm going to give you everything you need to know to start investing right now and to get you on the most successful track possible for someone who is just starting. But first, what is the first step? Step number one is actually opening an investing app. Now, there are dozens of different apps out there, some with different pros and different cons. I'll give you two of my favorites for beginners. Number one is Public. It is an investing app that really combines investing and social media together, so you get to see a timeline, you can see what other people are investing in, and you can see what I am currently investing in as well. If you want a head start, the link is in the description below. You get like $10 or $15 to start there, and you get to follow me and see what my investments are right now. I also have a very extensive video, actually 3 videos on how you can invest on Cash App too. One of the reasons why I like Cash App for beginners is because you probably already have it. You're already a little familiar with it, and it is extremely easy to get started. So those are just 2 places to begin. If you want something more serious, like let's say Fidelity or Charles Schwab, those are great options as well. But just to get you started, Public and Cash App is where I would go just to get your feet wet and just to understand how this whole thing works. Step 2 is, well, how much do you actually invest? That is a major question that many people ask every single day. Now, the goal here, let's say if you want to build wealth, become a millionaire down the line, 15% of your salary is the goal. If you can do more than that, that's great. But if you can't do that, you want to get as close to that as possible. I argue that any amount over 0 is good. So I have seen people start to build up a decent portfolio with just $20 a week. If you have seen my video about Cash App, then you've probably seen how my investment of Nvidia grew. I think I was investing, I don't know, $20 a week or so 3 or 4 years ago. And that is well over $3,000 today because of small amounts. You can make a lot of money investing in small amounts, but don't expect to get rich quick. It is a time game as well. So anything above 0 is great. I argue again, if it's $10 a week, $20 a week, $100 a month is how I started. Do something. Any amount over 0 is good. And as your salary grows, as your situation improves, you can do more. However, 15% is the gold standard when it comes to investing. Now, you have an app, you know how much to put in. Now the next step is, what do you actually buy? And here's a major misconception that I see people run into. You got the app, you deposit money, you link your bank account, do all that type of stuff, say, ooh, I'm investing. No, you actually have to buy an investment. You have to buy a stock or buy a fund, which we'll talk about as well. And that is what's going to help your money to grow. Now, when it comes to investing, there's also where people make the biggest mistake, because what you buy is really going to determine whether or not you're going to grow your money over time or whether you are going to lose your money. Now, I will say this, because losing money is scary. The stock market over time tends to grow. Okay, especially if you're looking at 5, 10, 15 years or more, you have a greater than 90% chance that that is going to grow. However, I would not choose individual stocks for beginners, okay, for beginners, because there's a lot more research and things that you would need to learn, which you can learn on this here channel, and we'll talk about that as well. So, if you've done all that, the first place I would start is what is called SPY. That is what we call an exchange traded fund that invests in what we call the S&P 500. That's the largest 500 companies in the US. And what that means is your $10, your $20, your $100, your $1,000 is going to be divided between the largest 500 companies. The advantage here is this: you do not have to decide whether Apple is going to be better than Microsoft or whether Nvidia is going to be better than Disney. You don't have to choose. You are putting your money there, and it's going to be divided between all of those companies, which is going to give you what we call diversification, meaning you're not going to just have everything in one specific area, which may or may not do well. So when you are investing in something like that, you're putting yourself in a very, very good position over the long term. Now, I would say, I think, depending on when you want to look at it, but over the last 20 to 50 years, the S&P 500 has gained anywhere between 7 to 10% on average. That's not every single year, Okay, it is not every single year. For example, last year in 2023, the S&P 500 gained more than 20%. The year before that, 2022, the S&P 500 lost nearly 20%. So it does depend, but over an average, once you stretch that time frame out, 7 to 10% is going to be your average gain, or has been your average gain according to history. So for beginners, that's the absolute best place to start in my view, and that's what you want to hold for the long term. Now, the last question that most people tend to run into is, wait, when do I sell? And if I sell, do I have to pay taxes? How does that whole thing work? So the way that it works is this. You open your app, you deposit, let's say $100, and you buy the S&P 500. Let's say that after 2 years or 1 year, depending on, when whatever it feels like you're doing, but let's say that you put in your $100 and it grows 20%. You now have $120. If you sell, you can take that $120 and do whatever it is that you want to do with it. Now, if you were to invest and lose money, there's some people that think, well, hey, well, I put in $100. Can I owe $200 or $300 if I lose money? No, that is not the case unless you use what is called margin, which is taking a loan to invest, which I highly do not recommend. Okay, do not take out margin. When I was a financial advisor, managing over $140 million, if a client came to me and said, hey, I want to borrow money, I want to use a margin loan, I said, hey, I'm not the advisor for you. I don't want to deal with that, okay? Because it is extremely risky. So if the worst case scenario is you put in $100 and you lose your $100, but again, when you're investing in the S&P 500, the S&P 500 has never gone to zero. And if it did, if you're telling me all 500 or the top 500 companies are now worthless, we got bigger problems to worry about. So that's another advantage there of investing in the S&P 500. But going back to our example, you put in 100, it goes up to 120, you can sell and take the $120 and do whatever it is that you want. And this goes for any stock too. Now, some stocks are going to grow faster than 20%. If some stocks can drop faster than 20%, it really depends on what it is that you're investing in. But once you sell, that all that money, that entire $120 would be yours, or whatever amount that you invest and whatever growth that you may get as well. Now, the question is, okay, well, what happens to taxes in this particular scenario? If you gain and you sell a stock within 1 year, you're going to get hit with what is called capital gains tax. That rate is going to vary and change. We've done an entire video on that breaks that down, so I'll refer you there. Or you can hold the stock for more than a year and your taxes are reduced. But if you sell in a regular investing account, you're going to get hit with capital gains tax there. It is much lower. Okay, I want to be very specific here. Your capital gains taxes are much lower than what it is on your job. So if you feel like you work 40 hours and you get hit with 40% tax or whatever it is, you're like, man, this sucks. And then you think you're going to get hit again when you invest in the stock market. The answer is not really. It is not going to be as severe. This is why millionaires and billionaires make so much money from investing in their own stock and selling their own stock, because they get taxed at a much lower rate. Now, you can argue whether or not that's fair, but that's the loophole that millionaires are using all the time. They would rather make their 9 to 5 money from the stock market, because they get taxed less, than working a regular job. So there's the rub there. So that is the basics for you to get started. If you want to learn more, guess what? I have an entire playlist geared just for you with more than 96 videos that you can binge at your leisure. So if you want to start that playlist, you want to check out this video right here.